Welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Friday 28th of June. Now, what we've got is this G20 meeting at the weekend between President Trump of the US and President Xi of China. They're going to be talking about trade and subsequently there's a degree of consolidation, a little bit of cautiousness that has engulfed the market at the moment. A little bit of sideways moves that we've seen coming through just in the last few days. Dollar's basically gone nowhere, although a little bit of a drop back early doors today. Nothing too significant yet. We've seen consolidation on treasury yields across the board, 2 years, 10 years. And also equity markets as well started to move a little bit sideways in the last couple of days. As I said, this is coming ahead of this G20 meeting, which I think could have a significant impact on Fed monetary policy going forward, and that's why the markets are not really taking too much of a view of ahead of this meeting, which could go any which way, to be honest. So we are waiting out for this meeting tomorrow, and subsequently, obviously, we're going to see the reaction on Monday. But in front of that, there's little real move that we're seeing. Equities, the dollar on euro dollar is consolidating just above that 1350 area breakouts, which is now supportive. You've got sterling dollar, which is holding above 2650, again a key level. You've got gold that's corrected back and just started to fluctuate a little bit just above 1400. So some really important levels which are holding at the moment, but would those levels hold in the event of a successful discussion between Trump and President Xi? And that would be the thing that traders are looking out for. Now, equities are remaining positive, possibly on the fact that there is a slight cautious element to this meeting. Not a great deal of expectation that I don't think that there's going to be any decisive move from this G20, but possibility of some sort of groundwork being laid. But ultimately, I think if the two sides again opt for a more of a wait and see approach, then I think that could result in some further expectation of Fed cuts this year, and subsequently the dollar will remain under pressure on a near to medium term basis, and also equity markets supported. So, in terms of other data points today, we've got the, first of all, we've had the UK current account deficit numbers which have come out, and they've come out better than expected, actually. Current account deteriorated from 24 billion down to 30 billion, but 32 billion was the expectation of the deficit. And that's helped to support sterling to an extent. Now, the key factor, I think, today on the data point will be this Eurozone data. Inflation flash for the June, expected on the headline to stay at 1.2, but the core expected to improve back to 1.0%. Now, if that undershoots, then the clamour for Eurozone monetary easing, or further monetary easing, I should say, in terms of possible rate cuts, that clamour will grow, and subsequently the euro come under pressure. So watch out for that at 10 o'clock. Other data this afternoon, revision of Michigan sentiment. Now, this is interesting as well, because he had the consumer confidence the other day came in pretty disappointingly for the States. Now, if Michigan sentiment also deteriorates back from 97.9 as the flash reading, the final reading expected to be 98. So if that underwhelms as well, I think that could have an impact on the dollar, but mainly the focus, I think, is still the G20 meeting, and that might restrict any real decisive moves. Okay, so my chart today is the Kiwi dollar. So the Kiwi dollar has been on a big run higher, actually, big rebound in the last couple of weeks as the US dollar has come under pressure. But also added to that, we saw the Reserve Bank of New Zealand standing pat the other day on rates, and subsequently the Kiwi has rallied. But look at this rally back to a pivot. Look how often these key turning points come at this pivot between 66.85 and 67.20. Since in the last 12 months, pretty much every major turning point has come around this pivot. So this is a crucial time, a crucial moment and crossroads for the Kiwi. But it comes with momentum indicators increasingly positive. You see the RSI 67. That is at the highest level since December. You've got the MACD lines, which are crossing above neutral. The stochastics are strong as well. So the Kiwi comes into this pivot band in really good shape, and certainly this run of strong bull candles continues to make gains today. And you can see on the hourly chart, strong configuration on momentum, little real problems there, and weakness being used as a chance to buy. But I think you'd be looking out for the 66. I mean, a close back under 66.85, having moved back through it, I think would be a disappointment. And you can see that on the hourly chart, where that would start to move below key near-term higher lows, 67.70 there, and you've got the breakout at 67.60. So, and that would be an important sort of moment whereby the outlook would be starting to turn around. So watch out for that if that were to be seen. But at the moment, obviously the move is strong, and a closing breakout above 67.20 really would open the upside again. I think 67.80 area initially as that April high. But to be honest, as I said, all the key moves, once you break through these levels, do tend to go quite a long way. So key turning points at this pivot, but also if they break on a decisive basis, you tend to see a decent run higher. So I wish you good luck in your trading today, and I will speak to you later.